Assalamu Alaikum, brothers and sisters. I hope you're having a great day. Welcome back to another video. I did a research a couple of days ago. I was trying to research and see. I love picking stocks. Okay, I've actually really enjoy analyzing stocks, finding out the best stocks out there, and then putting my money into. Okay. But the last couple of weeks, because of what's going on with the stock market, okay, and the fact that a lot of the stocks that I own, especially look at this top four here, look at that, 14% down on 3M, 22% down on Adobe, 9%, almost 10% down on air products and chemicals, and then little bit down, 0.5% down on Amgen. Now, that kind of made me think, okay, there's a reason why some of these stocks are down, and they have all different reasons anyway, not just because of the markets is actually down overall. Some of them are, but majority of them have different reasons, right? But yeah, it kind of got me thinking. I love picking stocks, but also what if I'm missing out when it comes to the ETF side of things? And we've talked about quite a few ETFs in this channel here, and a lot of you have asked me questions. Every time we post a video on ETF, we have a good discussions, a dialogue, and so on. Some of you actually found out some mistakes that I made, so I appreciate that. I will correct that towards the end of the video. But yeah, so alhamdulillah, it's been good eye-opener for me, and I kind of now sat back and thought, you know what, let me do the research and find out if some of these ETFs we've talked about is actually buy for me right now. Because every time we did these videos, I always did it and I just thought, you know what, maybe now is not the time for me. I always analyze it and then look at it and say, maybe now is not the time. So I just did another research. I'll be honest with you, I wasn't planning to do actual video on this. The research was just for me, but then I thought, you know what, let me share and then let me show you my process, what I basically was going through, the research that I did, and then why I came to this conclusion. So hopefully at the end of the video, if you stay that long, I will show you the 3 ETFs that I'm going to add to my portfolio out of the ones that we're going to analyze today. All right. One of the reasons I decided to do this is because the passive kind of investing side of things, okay, because it's quite hands-on when you're picking stocks. Okay, you have to look at the analysis. So for example, 3M, the earnings report came up, I looked at it, absolutely brilliant. A couple of days later, it went down massively. It went down because there was some sort of legal thing going on at the moment, and for that reason the stock went down, God knows what. And then because of the general stock market went down, is now down 14%. If that was an ETF and but let's say for example 3M was about 2-3% of that ETF, okay, it's not going to be 14%. You're only going to lose 10%, only going to lose 2-3%, okay, not 14%, not 10% or whatever it is. And that's why I don't actually genuinely like ETFs that have a like 1 or 2 stocks that are like 20%, 10% or whatever it is, okay. So yeah, that was my process, that passive investing side of things. So you buy it, you hold it, you forget about it, you dollar cost average every single month and then see it. So what we're looking for is, remember when we pick stocks, we're trying to beat the market. So if the market basically went up this 20% this year, you're looking for 20 plus, okay? And that was generally like my thoughts and what I wanted to do generally. So now I'm sitting on the other side thinking, okay, are there any ETFs out there that can either beat the market, okay, or at least mimic what the markets are doing? And if that's the case, if the market goes up 10%, can I get that 10% passively without having to do any work? And if these companies are Sharia compliant and we're not going to get into all sorts of trouble, then alhamdulillah, then that's a very good way of investing. And a lot of you have asked me that a lot in the last few weeks that we've talked about these ETFs. So yeah, let's get started. Let's have a look at the ETFs that I'm talking about, and then we will see at the end where we are. So what are we looking for here? The first section is the ticker, then the expense ratio, so how much you will pay if you were holding that ETFs per year, dividend yield, if they have any dividends, when they started, asset under management, so how much money that is invested in that ETF, number of holdings, and then so how many companies are in there, and then 1 year return, 5 year return. So 1 year return, just under 5 year return. So if it's been around for a while, then you want to see the 5 year returns and what it looks like. If there's any beta, so the beta is basically how volatile that ETFs. Normally you want something that's about 1, because that means that it tracks the overall market. So the market goes down 10%, it goes down 10%. If it goes up 10%, it goes up 10%. and then registered locations. So for example, as Europeans in Europe, can we buy some of these ETFs? Because remember, a lot of these ETFs are American based. So can we actually purchase some of these ETFs? So I tried to put all of that in one platform rather than just ticking click, click, click here. So that's the whole reason I did. And this is something that I did for myself first. But like I said, I want to share with you guys as well. Now, the first one is the ISWD. So this is iShares World Islamic, okay, Islamic World ETF. It has an expense ratio of 0.60%, and then your dividend yield of 1.5. So basically, going back to this, right? What this means is if you invest in this ETF, say £10,000 or dollars, whatever it is, okay, you pay basically about 60 pounds per year. Okay, £60 per year, not the £6 or £5 that I said on the older video. So that's the correction that I wanted to make. So if you buy this ETF and you've invested £10,000 or dollars, whichever it is, okay, you will end up paying about £60 per year. Okay, dividend yield of $1.54, which is quite good. In fact, like that's above the market. I don't know what the S&P 500 right now is, but I think it's about 1.3. So 1.54 is actually quite good. Inception year, so it started 2007. Right now, asset under management is $353 million in that ETF, and there are 334 holdings or different companies in these ETFs. 1 year or return is about 16.37%, and then 5 years, because it's been around for a while, okay, is 10%. This is really good. If you can get 10% or basically more than 10% every single year on your money, so if you've invested £10,000 and you can get about 10% every single year, that's solid returns. That's what you want. We normally, when we invest in the markets, we're looking for about 7, because the S&P returns were about 7 to 10% every single year on average. Some years obviously a lot more, some years a lot down. But then overall, in 5 years, if you can get 10%, that's really good. Then you've got beta, that's about 1, which just tracks the markets. So you can buy this in the UK, you can buy in the UAE, for example. You can buy in Belgium, France, Germany, and Switzerland, and a couple of other countries. Okay, so there's a few more, I couldn't list them all. But if you're interested, I'll put the link on the description so you can click that ETF section and have a look at that. So there's a few other countries that you can buy. Right, the next one, no surprises, is the same kind of ETF. Owned by the same more or less company, definitely the same company, and that's the ISUS. It has an expense ratio of 0.50 and dividend yield slightly lower than the other one, so 1.06%. It started around the same time. It has 168 million under asset management, and the number of holdings is only 101. So this one is the world. So okay, in fact, let me show you the holdings in that ETF. So the holdings in the ISWD is Johnson & Johnson. So we're looking at just top 10, right? Johnson & Johnson, just about 4%. Procter & Gamble, ExxonMobil, Pfizer, for example, Roche. I think this one is this company, Roche Holdings. I think it's Swiss company. Chevron, Adobe, Cisco, Thermo Fisher Scientific, and Salesforce. All these companies are Sharia compliant. 25% of the overall total. That's what it is. Okay, and I looked at it. I think about almost 20 of those companies are actually Sharia compliant. Shout out to one of the brothers that basically that on part of our community, Sajid Muhammad, who is actually quite a young man, and I will talk about you in a second. But generally, he actually did the research. He went on Zoya and looked at it. I think it was the top 10 or more, and he said a lot of these companies are actually Sharia compliant. So that is one of the reasons. While I was doing the research, he's actually watching the video and actually did his own research, and I actually loved that. That's the reason I started this. Okay, guys, I wanted to share my journey, but also I want you guys to share your journey and help each other. Okay, there's no way, basically, there's no point criticizing each other. If we make mistakes, obviously, let's correct each other, inshallah, for the sake of Allah subhanahu wa ta'ala. But at the same time, I absolutely love the fact that he went away at the age of 18 years old. Okay, in fact, I'm just going to say it now, honestly, I'm honest brother, if you're listening to this video, just keep doing what you're doing. Honestly, you're in the right journey. I've got a young brother who's actually just a second year of university. I'm trying to get him into investing. He's done a little bit, but because he's second year university, is quite hard at the moment. So I'm going to let him be for now. But as soon as he gets his first job, I'm just going to be on his case. So I wish you all the best, brother. You're doing an amazing job. Keep asking the questions, keep watching the videos. If you ever need anything, let me know. You can, personally message me on the Instagram account. I can reply to you and whatever. But remember, I'm not a financial advisor, but I just want to help you and get, InshaAllah, just start investing. Honestly, there's a massive benefit. It's starting at this age. So Sajid, if you're watching this, akhi, keep going, InshaAllah. So yeah, he did his own research and found out there's a lot of companies that are Sharia compliant. And then you've got, I like the breakdown because healthcare and information technology are actually my top two in my portfolio as well. Energy, material. Energy is basically a sector that we haven't actually looked at ever in this channel, because I just don't like them as much. But they have, basically last year, they were the best performing sector. This year will probably be the same as well, because look at the oil prices right now. It's like 90 something per barrel. So it's quite good to see that there's actually 14% in here without me having to worry about specific companies. You can invest in this and you don't have to worry about it. Then you've got materials and all the other companies in there and sectors. And then when you look at around the world, although 60% is the US based, okay, you've got Switzerland, you've got France, Japan, United Kingdom, so on, so on, so on. It's very well diversified ETF, and I absolutely like that. So that's one of the things I want to share. Now, this one is almost the same, okay, ISUS. And when you look at it, you can also buy it in the UK. But let's just quickly talk about the returns, because the returns are very impressive. 23% just 1 year, and 5 years is 11%, and then it has a beta. So 5 years 11%, so it's actually done better. The reason for that is, I believe, is because a lot of the stocks are in the US market. Although there's 60% in there is of US, but there's a lot of them, all of them are in the US, and the US market has been doing absolutely brilliant job last couple of years. So for that reason, I think that's why it's a lot more than actually this one here. Okay, but I actually like both of them. The fact that you can get almost 10% every 10 years, every 5 years. Okay. So the next one we're going to look at is this, but before we do that, let me quickly show you the stocks that are in there. So Johnson & Johnson 6%, Procter & Gamble, ExxonMobil, Pfizer, Adobe, Chevron, Cisco, Thermo Fisher, Salesforce, and Abbott Laboratories. Now, all of these companies are more or less in the top 10 on the other ETF, but at the same time, there's a couple of differences, okay? But again, 42% is actually companies that are Sharia compliant. And even if you look at another 5 to 10 stocks, is more or less the same as well. These companies are Sharia compliant. Okay, so we're not looking in general the whole ETF. Healthcare, again, 30%, information technology 23%, energy about 13%, more or less similar to the other one as well. Really, really good, and I like it. I absolutely love this. It's great. Okay, so the next one is the emerging markets one. This one has a higher beta, okay, but the dividends are quite high. It started around the same time. It has 140 million in asset under management. It's very well diversified, 309, but last year's returns were not that great, okay, but this last 5 years has been 10%. And I think there's a lot to do with, obviously, COVID situations last year, so I will definitely not worry too much about it. And okay, we'll look at it. In fact, let's just have a quick look now, because the top holdings, last time we did a video, and I can't remember how long ago this was, Alibaba was the, I think, top holdings. Alibaba was crushed in the last year. And for that reason, I think that's the reason it's been removed. And I am really happy with that, because I don't like Alibaba at all. It's not one of the stocks that I want to hold, and there's so many reasons why I don't want to. But yeah, I'm so happy that they took that, and now Taiwan Semiconductor Manufacturing is actually the top holdings, and Samsung is basically next one. So some really good companies that I know already, and there's a couple of Saudi-based companies that I don't know. Okay, so Saudi Basic Industrials, Al Rajhi Bank, I think, is also Saudi-based company, but you've got a couple of others, Vale as well. I think it is the mining company in Brazil. But yeah, so it looks good, and I like the fact that the diversification side of it, when you look at the information technology, is 41%, material, energy, and so on. And then when you look at the breakdown countries, 24% is Taiwan, then Korea is about 23%, India, and then you've got China, Saudi Arabia, Russia, Brazil. So, okay, really good, very well diversified ETF generally. So that's the third one. Then the next one that we're looking at is Halal. And this ETF is owned by Wahid. We've talked about this before. The expense ratio is 0.50, dividend yield of 0.80. It's a bit low for my liking. It would have been nice if it was above 1. And then it only started 2019. It has $179 million under asset management, and then holdings are 224. Return last year, basically 28% or almost 29%, which is quite good because it's been in existence in just a couple of years. It doesn't have that. The beta, I couldn't find it. You can buy in the US and the UK. So Interactive Brokers, you can buy them. You can buy it actually through Interactive Brokers. And let's see quickly the holdings in this ETF. So you got Apple, Tesla, Johnson & Johnson, Procter & Gamble, Pfizer, Adobe, Cisco, Thermo. It's very similar to some of the ones that we've seen on the other ETF. But the only issue I have, right, so if you look at this one, right, 22%, this is quite high. Okay, then you look at the ISS, so it's about 6% there, 3%, so 3%, 4% is the highest. But when you look at this one here, right, 18% just Apple. That's ridiculous. That's quite high. Okay, and then you've got Tesla 5%, Johnson & Johnson 3%. I would have liked this just to be about 3 to 4% maximum. Okay, so that's quite a lot. But yeah, so great companies. Again, Apple, I have a question mark, like we said in the last video. A lot of you have actually expressed your feelings about these companies. But again, whatever you feel comfortable, that's up to you. That's between you and Allah subhanahu wa ta'ala. I can't really judge anybody. I'm not here to judge anyone. If you like Apple, go for it. If you hate them, just get rid of it. Okay. In my opinion, I don't want to invest it. I used to own it. I sold it. I've explained the reasons why long time ago. Right. So that's that one there. And then next one we look at is SPUS. I could include the other one, by the way, the SPDRE, whatever it was, because that's not available in the UK at all. And also, we can't buy in the UK, so I just left that one out. So almost basically 0.5%, above 1% dividend yield. It started in 2019, 133 million under asset management. You've got 188 companies in there, 25% last year, and you will see the reasons why that is doing really well. You can buy in the US. Oh, did I say? Yes, you can actually buy in the US and the UK. Same as Halal. Both of them are available through Interactive Brokers. I didn't know that information. One of the brothers shared that with me. I did the research. I've got a friend who actually basically has Interactive Brokers account. I asked him and we've confirmed it's actually there. Now, so the ETF has Apple, 12% of Apple, Microsoft 10%. Just those two has absolutely crashed the markets last couple of years. And for that reason, I think that's why it's got 28% or whatever it was, 25% overall returns for 1 year. And then you've got the alphabets, then you've got the Tesla, Nvidia, Meta, which I was quite surprised, Johnson & Johnson, Procter & Gamble, Home Depot. Now again, this one has some great companies in there, but questionable as well. Like we talked about in the last video, I'm not going to repeat that again. Okay, so the next and final one is, some of you have mentioned this to me so many times. I just wanted to talk about it just very briefly. It has a beta of almost 1%. And then we'll talk about the other fees in a second. And then you've got 1.26% of dividends. So that's a percentage. Okay. And then it started 2001, and another place it says is 2004. So I don't really know. It was very hard to find information because HSBC website is a little bit funny. Other websites had a different figures. Same goes for the asset under management. Okay, so don't quote me on this, but I think it's about that much. Some of it was in pounds, some of it in dollars. A bit confusing. So 948 million. 125 companies in there, return about 6%, and for just 1 year about 7%, whatever, and then 16% of the last whatever years. It's based in the UK. Couldn't find any beta for any of these companies, basically ETFs. based in the UK, not sure if it's in the US. Now, the issue with this one is, brothers and sisters, is these, you got almost 1% expense ratio, then you got front load fee of almost 6%, and then current management of 0.75. So you're paying 3 different fees just to own that ETF. So you're paying a lot of money. In my opinion, this is definitely no. If you own it, please just let me know how much you actually paid, because different websites have different information. So I don't know. Just confirm it with me. Let me know what basically is going on with this. If you own it, that would be really, really helpful to let us know, like, what do you pay? Okay, how much do you pay, and so on. So yeah, out of all of these companies, right, all ETFs, my favorite, you probably know already, is these 3 here. Okay, these ETFs, I used to own them before, and I'll show you in a second. Those Halal is, I think, will probably be my next one. SPUS, I'm not comfortable. There's quite a few companies in there that I'm not really fan of. This one is too expensive, okay? But it has similar sort of companies as well. It's got Microsoft, Apple, Amazon, Tesla, Alphabet, Nvidia, and Alphabet, both of them, the Class A and Class C, Meta, Home Depot, and Johnson & Johnson. So great companies, but some of them are question mark. So again, the expense ratio is just too expensive, okay? So these 3 are my favorite. So what happens? Okay, let me show you. Okay, so because I've always worried about the expense ratio side of things, so I've calculated, and I will share that with you now. So here we go. So I already added these 3 into my portfolio. So I created a section called ETF, and then there they are, all 3 of them, the iShares ones. So if I buy 334 shares, about £30 per whatever, it's not that much at the moment anyway, and my cost basis will be about 10,000. So if I invest 10,000, how much would I be paying? Okay, so I would be paying, obviously, because it's I think it's 0.6, that one. So I'll pay £60. But in dividends, I will receive 160. So I still get 100 just for the dividends will cover, and it still give me £100, okay, in cash. And on top of that, you would hope the ETF will appreciate in price. So that is the capital gains as well as £100. So per year, you're making £100 as well as and it covers all everything else. Plus on top of that, you get £100, and then you got price appreciation. So I don't know, see how it goes. Okay, I'm going to invest in all 3 of them. Okay, not equally, because I would prefer put more money into the world one first, because I wanted that diversification. I want that basically exposure to the rest of the world rather than US based. And then US, I think I will do 50%, and then 30%, 20%. I think that's what I've done already. And I'm ready to put £1,000 into these stocks, into different ETFs right now. And the reason for that I'm able to do that right now, although I do have the cash, is because I'm going to sell TSM. Okay. And the reason for this is because there's a lot going on in China right now. In China at the moment, China's threatening Taiwan to take it back or whatever. Top of that, this ETF, this stock is in non-ISA account. So if I keep it and it keeps going up, I would have to pay a lot of interest later. So instead of owning the actual stock, I'm going to own it through here, okay, through the ETF itself. So because this one has 22%, okay, I'd rather own that 22% than actually own the actual individual stock. So I will sell that ETF and sell the stock, okay, Taiwan Semiconductor. I'm going to sell it when the markets open tomorrow morning, and then I'm going to take that money and put it into the ETFs. Okay, right. The video is way longer than I wanted, but just one more thing I want to do. So just to be transparent, and I've always said this to you guys, okay, what I'm going to do now is I've deposited £1,000. Like I said, I'll sell this tomorrow. I already have, I think it's 1,000, the overall, yeah, 1,100. So 1,200 in that, in Taiwan Semiconductor. So 1,000 of that money now goes to this. I've already set up the ETFs. So I set up the Islamic ETFs here. I'm going to click invest. I put the money in already. So I'm going to put 1,000. So what's going to happen is 20% will be the emerging markets. So that's £200, £300, or 30% goes to this US. And then, like I said, 50% goes to the world one. The UK markets are open. So I'm going to press confirm. and that should now be added to my portfolio. Okay, £1,000, and I should have that once this is complete. Okay, so the final thing while that's happening, okay, the one thing I want to share with you guys is the ETFs. If you're buying this in the UK, you will not be taxed at all. So initially I thought you would, but because it's trading in the UK and not in the US, although it's the US securities, you actually, because it's trading in the UK, you don't get taxed. Okay, and I can prove this to you. So I used to own this long time ago. So if we go back to history and keep going down, actually June of 2020, that's when I started buying, and then I've had it for a while, and then I sold it at some point anyway. But there we go. So the dividends I've been paid at that time was £4.92, and when you look at tax rate, okay, it says 0, and withholding tax, it was 0. So I didn't have to pay any taxes. I used to own about 20 shares, and that paid me almost to £5 straight into my account with no taxes involved. And because it's under my ISA account, I didn't have to pay any of that as well. Right, so let's go back and see if that's gone through in terms of the ETFs. There we go. I'm down a little bit already, £4 for whatever reason. But there we go. That's my ETFs now. If you look at the holdings, as you can see, I'm down £1 there, £2. That's very strange, by the way. It's very quickly down. So I'm going to check that in a second, but I don't know. Anyway, down 4% already, but I'm going to monitor this. I'm going to keep it here for at least a year, and I'm going to dollar cost average every single week, okay, or every single month, and then see how it goes. So a year from now, we will review, and I will see the returns of that investment and how much dividend being paid and how much I paid for holding it. Once that we've established what it is, then I can share that research with you, and hopefully you'll see how it goes. But there you go. I'm really sorry the video is so long, but I hope you gained something from it, and I hope I've been transparent enough to kind of show you some of the things that I'm doing right now with my investment. Have a wonderful day. Assalamu Alaikum. Take care.